I'm Nikki Jovicic from LookUpStrata, and for today's National Insurance webinar, we're very happy to welcome Tyrone Shandiman from Strata Insurance Solutions. This national webinar is about the insurance dispute resolution process. If you have concerns about decisions made by your insurer, were you aware that there was a dispute resolution process available to help mediate? Today, Tyrone's here to provide an overview of the dispute resolution process, including useful tips for policyholders in pursuing a dispute with an insurer. Tyrone will be discussing real-life examples and provide a step-by-step guide on preparing for a dispute. The presentation will be followed by some discussion and Q&As. Before we begin, I'd like to mention that the information contained in this session, including the discussions that arise from submitted questions, is not legal advice and should not be relied upon as legal advice. You should seek independent advice before acting on the information contained in the session. We thank Tyrone Shandiman from Strata Insurance Solutions for joining us again today. Tyrone is the founder and managing director of Strata Insurance Solutions and CoverRight Insurance. With a diploma in insurance broking and a diploma in financial planning and over 15 years of experience in the financial services industry, Tyrone has risen to be an industry leader in the world of strata insurance. Strata Insurance Solutions has grown to service over 600 clients nationally, covering both residential and commercial properties of all sizes. As an authorised representative of Insurance Advisor NAT, they focus on building long-term relationships with clients while keeping in line with IA's key values and principles of advice, value, trust and choice. Tyrone is also the chairperson of Australia Consumer Insurance Lobby, which is an advocacy group for consumers on issues associated with insurance, and Tyrone also is a leading contributor and author for LookUpStrata. Tyrone and the team at Strata Insurance Solutions have been long-time contributors and supporters of LookUpStrata, and we thank Tyrone for that. Tyrone regularly provides assistance to our readers from around Australia with answers to their interesting strata insurance questions. This is the fourth time Tyrone has joined us for a webinar, and just one of Tyrone's past sessions from the beginning of this year dealt with water damage claims. It had almost 1,000 views on our YouTube channel so far, and that session also holds the record for the largest number of registrations for one of our webinars, where we had almost 1,000 people register for the session. So welcome again to today's webinar, Tyrone, and thanks for joining us. We really appreciate you being here.
Excellent. Thank you very much, Nikki. It's a pleasure to be here today. So let me just share my screen and bring the presentation up. All right. How are we looking there, Nikki? We're all good?
That's great. Thank you, Tyrone.
Excellent.
That looks really good.
All right. Well, thank you very much. Thank you all for joining today. Please, if you've got any questions, pop them in the chat. I am looking at that chat as well as Nikki. So feel free to ask any questions throughout the presentation and I'll stop and answer them as well. So we've had over the years a number of our clients. Well, firstly, I'll start by saying that most of our clients are very happy with the services that they get from insurers. In fact, less than 1% of our clients go to dispute resolution. So it does show that the industry is doing the right thing and they're doing a good job by most clients. But when things don't go right, our clients, for our clients and insurers, there is a dispute resolution process available to mediate between an insurer and an insured. So to give you some statistics of our company's disputes, so we win about 70% of all disputes that we take through the dispute resolution process. That is significantly higher than what what the average success rate is. And there are a few reasons for that, and I'll talk about that later on. So it's important to note, if you're a Strata Insurance Solutions client, we do all of this for you today. So just know that I'm going to talk about preparing dispute submissions and doing research. But if you're one of our clients, we do all of this for you, but it might be helpful to know what we actually do when you have a dispute. Okay, so what are we going to talk about today? So today I'm going to discuss what a dispute is, the dispute resolution process, the research and groundwork that you should do to prepare a dispute, and then actually preparing a dispute. And today I'm really going to focus on water damage claims. And the reason for that, I'll give you some statistics very shortly, but in Strata, they are the most, or that's the largest area of disputes in Strata. So if I'm talking about water damage today, but you've got another dispute, you can still apply the same principles that apply to your dispute as well. So what is a complaint? Now, I'm not going to read this slide word for word, but I just want to say that recently the Australian Securities and Investment Commission have updated the definition of a dispute to include an expression of dissatisfaction, okay? So this becomes a little bit more onerous on insurers because once you express dissatisfaction about the company, products, services, or the handling of a complaint, that's when an insurer should typically lodge a dispute within their company. They don't always do it though, but that's when they typically should. Okay, so the next thing, I just wanted to show you some statistics about disputes. This is information published by the Australian Financial Complaints Authority, who I'm going to refer to today as AFCA, and that is the body that was formerly the Financial Ombudsman Service. Okay, so AFCA publish yearly reports about the types of disputes that they get in general insurance. What we know is that claims, and obviously this is fairly obvious, that 74% of all disputes relate to claims. And on the right-hand side of the screen, I've broken that down as to what type of claims disputes that insurers have. So it's fairly evenly split between the delays in handling the claim amount, and denial of cover or denial of the claim. And that's the smaller two-part portions of that pie. My prediction this year is that we're probably going to see an increase in the number of disputes associated with claims delays and delays in handling a claim. The reason for that is earlier this year, we had the second largest claim on record, a $5.2 billion flood that went through Queensland and New South Wales. And we at the moment in the insurance industry and the building industry are really seeing significant delays with repairs because there are issues with supply of materials and labor. So my prediction this year is that the delay in handling claims issue will be a lot higher this year than in previous years. Other clients also have disputes around service quality. And there are some other disputes as well that make up 18% of all disputes in AFCA, which can be things like premium increases and denial of cover from an insurer. So I just thought I'd share with you my views on fairness of the dispute resolution process. I get asked often, do I think the process is fair? And I think the answer to that is yes and no. But the first thing I want to say is I've never had a client say to me the process wasn't fair after they've just won a dispute. So it's always fair when you win, but it sometimes isn't when you're not successful. But what I think is fair about the process is it is a free process for the insured. So the insurer pays for the process all along the way up to the Financial Complaints Authority. The process, if you go to the stage of the Australian Financial Complaints Authority, is independent from the insurer, and you don't always have to put forward every single argument. The adjudicator might review your dispute and put an argument forward for you that you may not have put forward in the dispute submission. So the purpose of the dispute process is it's designed to be a costs-free jurisdiction, meaning that you don't necessarily always need to get advice, although it is recommended sometimes. What's not fair, the time taken to settle a dispute. So we've had clients who have had significant water damage issues in their property and had a dispute with an insurer, and it's taken 12 months to settle their claim, and they've had to live in a property that's been damaged, and they've had to wait 12 months for an outcome for their dispute. The other thing is insurers have greater access to expert witnesses because they've got the deep pockets to pay for it. And a lot of the times when I speak to our clients about getting their own independent expert witness reports, the first thing they have to weigh up is, do we want to spend more money fighting a claim that has already been denied? And that's a real difficult predicament for some clients, particularly those that may not have the means to do so. And the last thing is insurers have greater experience in dispute resolution and handling disputes in the Financial Complaints Authority. So most policyholders have little or no experience. They are fighting an insurer who has a team that is their full-time job to manage and just manage disputes. So it can sometimes be a bit of a David and Goliath battle. But my overall view of it is that the process is fair. If you've got an insurance broker, that obviously does help along the way as well to get the advice on your dispute. Okay, so I wanted to talk you through the dispute process and my views on this as well. So there are 4 stages available to policyholders in dispute resolution. Stage 1, I really want to talk about the importance of stage 1. This is where you simply deal with the issue with the person in the insurance company that's given down the claim decision or given the poor service or advice. Stage 1 is probably the most important part of a dispute process and where a lot of the disputes get resolved. Now, the reason why I get a lot of clients that get a claim handed down, that they're not happy with the outcome. And the first thing they say is, we'll refer it to the ombudsman. Well, firstly, you can't do that. But secondly, what you may find is that the claims handler has a more sympathetic ear than the adjudicators in the other stages of the process. But also, the response time in stage 1 is significantly faster than in the other stages that have got mandated response times. If the claims handler or customer service representative or the person you're dealing with at the insurance company cannot manage or resolve your dispute, then you can take it to the insurer's internal dispute resolution process. And what this process does is it takes the issue away from the person you're dealing with to another person or another group of people in the company, and they will review your dispute or issue that you've raised and give a response on that. Now, once you've gone to stage 2, you can then go to stage 3, which is referring a matter to the Australian Financial Complaints Authority. Now, you cannot go to stage 3 without having first gone to stage 2. And if you haven't done that, the AFCA will refer the matter back to the insurer for you to go through the internal dispute resolution process. Now, they can hear complaints up to $542,500. And if you've got a claim that exceeds that upper limit in Strata, what you may consider doing is, if you've got multiple units that are damaged, you might be able to split your claim and deal with a few of the units. And that will give you and the insurer some guidance in the free dispute process as to what the outcome may be. And it might compel the insurer to settle the remainder of the claim if you are successful. The thing with the Australian Financial Complaints Authority is that it can take the average wait time is 3 to 6 months. But I've had claims that have taken 12 and 18 months to reach a response. So if you get to stage 3, don't expect that you're going to have your claim or dispute heard and resolved within a week. It's going to be more like 3 to 6 months and possibly 12 to 18 months in some instances where there's a complex matter. Now, the decision is binding on the insurer, but it is not binding on you as the policy holder. And if you are not happy with stage 3, you can then go to stage 4, which involves litigation. And this is where it goes from being free to starting to add costs, because you may need to speak to a solicitor or lawyer to get some advice around how to litigate against the insurer. At this stage, it is also suitable for claims over the upper sum insured limit. And also public liability claims are not heard through stage 3 as well. And likewise, if you've been unsuccessful in the Financial Complaints Authority, you can go to stage 4. Now, there is nothing stopping you from taking the matter straight to stage 4. The courts won't stop you from going through the dispute processes. But I always say, use every step of the way as your way of having a decision overturned. All right. If you go straight to stage 4, you might find that you could have had something overturned in an early stage that you didn't have at the litigation stage. And that's going to cost you a lot more money as well. Okay, so let me just bring next slide up. Now, I mentioned earlier that we are successful in 70% of all disputes that we put forward to insurers. There's a reason for that. We have principles that we have in deciding whether we do or don't fight a dispute. But there are three things I really wanted to talk to you about today around what you can do to really determine your prospects and whether it's a matter you should dispute or not. So the first thing I like to work out is, are there evidence, is this dispute got sound arguments to it? Is there a sound reason why we should be disputing this issue with an insurer? And I'm going to talk to you more about how you can build your evidence later on. But the worst thing you can do is say that insurers should pay a claim because because it's morally right for them to do so. If it's morally right for an insurer to do something, it will be written somewhere in a code of practice or in legislation or somewhere else. So firstly, do we have sound arguments for lodging a dispute? The second thing is, be prepared to be commercial. If your claim is one of those 50-50 claims and your prospects are really not, and it's not a closed cut case, and the insurer is prepared at one of the stages to offer you a partial settlement, you should consider that, okay? Because what you might find is you go to the Financial Complaints Authority and you end up with nothing when you could have accepted a partial settlement earlier on. If your claim is a closed cut case and you really feel it's got strong prospects, it might not be appropriate to get a partial settlement. You should seek advice on that. Thirdly, don't abuse the process. It costs an insurer $7,000 to $12,000 for you to take a matter to AFCA. Now, you might think that that may be compelling enough reason for the insurer to settle your $1,000 claim, but that's not always how things work out. We know that insurers will fight matters on principle only rather than buckle and pay something that they know they shouldn't be paying. And the problem for you as the policyholder is that if you take a matter to the Financial Complaints Authority that doesn't have prospects of success and you lose it, it has implications on your insurability. So firstly, the $7,000 to $12,000 gets included on your claims history, and that's going to follow you for 3 to 5 years. Secondly, you may find that you've burnt your bridges with that insurer. So just keep in mind that if you don't believe you've got prospects of a claim, I always say do not take a matter to the Financial Complaints Authority, because it can burn you in the end if you do so. Now, evidence-based disputes. I like to really, when we lodge a dispute with an insurer, there is always something we reference as to why the dispute or claim should be paid. And there are 5 things on this slide, which I'm going to go in more detail. But most of the time you're dealing with a policy contract, which is a policy wording or the policy schedule, and the wordings and exclusions and terms and conditions of that policy. Expert evidence is also a key to determining causes of claims. Our silver bullet is precedent cases, which I'm going to show you a little bit later on in this presentation. The General Insurance Code of Practice is where you might go to on a service issue, or if you feel that the insurer should be morally doing something, then the Code of Practice will probably include that in those issues in it. And finally, most importantly, is legislation. And one thing I did just want to say is where legislation contradicts with one of the other 4 points, legislation always prevails. So as an example, an insurer's policy wording cannot contradict legislation. And if it does, the legislation prevails. So preparing a dispute. So I just wanted to share with you 5 things that we do in preparing a dispute with an insurer. I'm not going to read every slide word for word, but I'm going to talk about these 5 things. So first thing that you have to do when you're preparing a dispute is you have to review the insurer's decision, okay? And what I like to do is say, does it pass the fairness test? Does this pass the pub test? Is what the insurer is doing fair and reasonable? And that's something that you know can be very subjective, and what the insurer does and doesn't do or doesn't pay can be subjective. A good example of that is an insurer denying a claim associated with fixing a membrane. You might think as a policyholder, the insurer should be removing the tiles and fixing your membrane, but insurers' view is that they don't want to be, maintaining a property. So I guess that the fairness test is always very subjective. The next thing, if the insurer has denied your claim on a policy exclusion or condition, you want to check the policy wording and the policy schedule and the contract. The first thing is, have they referenced the policy wording? I've had a few instances in my time where an insurer has said to me, the policy is not intended to cover this. And I always say to insurers, if your policy isn't intended to cover something, it should just explicitly say so. So always make sure that if an insurer is denying a claim on an exclusional condition or policy coverage, they must reference the policy wording or a term in their policy schedule. The next thing I've come across over the years is insurers not referencing the entire condition or exclusion. A really good example is a wear and tear exclusion. Where an insurer declines a claim that's got wear and tear and water damage, and they say we don't cover claims directly or indirectly from wear and tear. But they miss out in the bit in the exclusion which says, but we will cover the claim if there is another operable cause that applies, right? In this case, water damage. So if the insurer is referencing a policy exclusion or condition, go to the policy wording and read that wording and make sure that they have fully outlined the full exclusion and condition in their denial. And lastly, are there any subjective or ambiguous meanings, or is there anything in the policy that is open to interpretation or disputable, right? So I'm going to talk about this later on, but a really good example of a subjective meaning is the insuring clause in all strata policies around sudden and accidental damage. What is sudden? The policy doesn't define that. And in my view, sudden is very subjective, and I'm going to talk about that later on in the slides when we talk about water damage. And finally, when you're reviewing the insurer's decision, are the response times within the General Insurance Code of Practice, which I believe is 4 months for non-catastrophic claims. So if you've had a claim that's been significantly delayed, refer to the General Insurance Code of Practice because it will have claim response times that are required. Now, expert reports. I really wanted to talk about this today because unfortunately, expert reports can sometimes come back very questionable, or reports that insurers have engaged experts on can sometimes come back a little bit questionable. Unfortunately, in our industry, expert reports are not always independent, unbiased assessments. What I've found in my time is that some experts will give findings in reports that tend to favour insurers more often than not. And I do find some insurers do from time to time tend to favour those experts, all right? So I'm going to tell you what you need to do when you're looking at an expert report. So what is an expert report? It could be a report from an engineer, a plumber, a builder, an electrician, which states things like the cause of damage, which is what insurers are looking for. The first thing I want you to do is to determine, were appropriate investigations done to reach the conclusion that the expert reached. And I'm going to give you a really good example of one where I had an engineer who was doing an assessment on a failed waterproofing membrane in a shower. The engineer didn't go out to site, but they reached a conclusion that the waterproofing membrane had failed due to movement in the building foundations. And we said, how is it possible that you can come to a conclusion on movement in building foundations without even inspecting those foundations? And when we put that argument forward, the Financial Complaints Authority threw that report out. Okay, so just because an engineer or an expert says something, it isn't always true. The next thing, which really is a bugbear for me, is reference to building codes. Contractors and assessors will regularly reference that a building is defective or there is a claim associated with faulty workmanship, which is an exclusion in a policy because it wasn't built to code. Now, what they reference is today's building codes, but what we know is that when a building is built, it is compliant if it complies with the building codes at the time it was built, all right? So just be mindful that there are times, and I've come across it, where experts will reference the most up-to-date codes and not the codes at the time the building was built. And finally, was the cause contestable? And when I say was the cause contestable, sometimes when you have an event, there might be more than one possible cause of a claim. All right, that is enough to give you reason to contest that expert report. Now, if you believe an insurer's expert report is not correct, the best way of disputing that is to engage your own expert. And I want to talk about this because people think that involves a lot of costs. Quite often, these three issues that I've got up on the screen here are brought out because an insurer has declined a claim. They've given their expert report and their reasoning, and the client has gone and engaged a builder to fix the damage and and conduct repairs on the property, thinking their claim was denied. And they show that report to the builder or the plumber or the electrician or whoever. And sometimes the electrician might say, or the builder might say, well, the codes that they're referencing are wrong, or we don't agree with this report for whatever reason. And you don't necessarily need to get an expert report in response to the insurer's report. Sometimes it takes just 3 or 4 sentences from a builder or a plumber in an email to you to say, I don't agree with this report, and this is the reason why. Okay, next slide. So, research. This is my silver bullet. This is really what I use whenever I have a dispute with an insurer. Now, I mentioned earlier that there were more than 17,000 general insurance disputes that were lodged with the Australian Financial Complaints Authority. There's a good chance if you have a dispute with an insurer, it's already, your dispute has already been heard in the Financial Complaints Authority, and there's a precedent case out there which supports your claim being paid or not, okay? I'm going to show you how to search decisions in the Financial Complaints Authority and what those decisions show you. So just a second, I'm going to bring up another screen. Excellent. Okay, so afca.org.au. If you go to what to expect and search published decisions, and I did touch on this in a previous presentation, but this is where you can search for decisions that have previously been handed down. Now, there are 2 things you can do. You can search just simple keywords like membrane or shower. Let's just use the shower example for a shower claim. Or you can go down to an advanced search and you can use exact phrases like waterproofing membrane, blocked pipe, burst pipe, and you can exclude certain phrases, and you can use one or more of certain words as well. And what you can do is you can go to product name, and for Strata, I go to residential strata title, and you can search, right? And you can see 55 claims that have been through the Australian Financial Complaints Authority related to showers, all right? And then what I do is I click on all of these and open them up. And this is what a determination looks like, okay? And what you want to do is see what the determination was. What I like to do is firstly say, what was the outcome here? Was it in favor of the complainant? This one was. If it was in favor of the complainant, I like to read the reasons for the determination. And quite often, this is going to give you all the arguments you need for a dispute with an insurer. So this is our silver bullet in disputes with insurers. And what I like to do, it gives you a case number at the very top. If an adjudicator has made a comment on a previous dispute, I like to reference those comments in my dispute submissions, okay? This is our silver bullet for disputes. Now, let me just bring the presentation back up. Yes, excellent. Okay, so I mentioned earlier on the Insurance Contracts Act. think it's warranted that you as a policyholder should go and read and review the Insurance Contracts Act. A lot of the time, decisions are already the references to the Contracts Act. An adjudicator has done that in a past decision. Anything I've referenced in the Contracts Act in a dispute submission we've made has been from a decision that an adjudicator has made and commented on in their own policy as well. And lastly, the General Insurance Code of Practice. Again, you can search that if you've got a service issue or you've got a moral issue from an insurer, and most of the time that's going to be outlined in the General Insurance Code of Practice. Other considerations. So I mentioned earlier, it may be a consideration to engage your own expert witness. This will be at a cost to you, okay? And that can be things like, okay, good question, Amy. So on the previous slide, does the Australian Financial Complaints Authority address complaints about insurance brokers of public liability? Yes, it does. So that they deal with complaints between policyholders and financial services license holders, including insurance brokers and insurers. Where do I find the decision's silver bullet link? Okay, here is the link here on the page. So at the very bottom, Sarah, of this page. But if you go to AFCA and the What to Expect tab and then search published decisions, that's where you find the link. Okay.
And we might share that too, Tyrone, just to let everybody know. We'll send that out as part of the resources this afternoon. So keep an eye out for that too.
Yes, excellent. All right. So engage your own expert witness. You may need to do this. It is recommended, particularly in cases where the expert witness, the insurer has engaged, you disagree with their findings. Photos can also be very good in helping to build your case. I did just want to talk about financial hardship as well. So if you're in financial hardship, for example, your property has got significant water damage, you don't have the financial means to pay for it, and you're living in a property that's got mold, you can have your dispute expedited. I want to just let you know it's a very onerous process, all right? But you have to provide, I think, examples of your income and all of that, and AFCA may expedite your claim in certain instances. I also wanted to talk about non-financial loss, okay? So quite often when you're disputing a claim, you're talking about the cost to repair, the cost of loss of rent, the cost of accommodation, and financial losses. The Australian Financial Complaints Authority has got a provision in it for non-financial losses, and that is for an unusual degree or extent of physical inconvenience or time taken to resolve the situation, or interference with the complainant's expectation of enjoyment or peace of mind has occurred. Good example, water damage claim. You're having to sit in your living room and in a property that has the ceiling removed for 12 months because you've had to wait for the insurer to go through the dispute resolution process. That's not a financial loss, but you can be awarded up to $5,400 for that. Okay, so just keep that in mind when you have a dispute, that you may be able to include that in your submission. Now, if you win the claim, can you recover the cost of the expert advice, Tom? Yes, you can. Okay, so you can cover the cost of expert advice. There are provisions in policy wordings for claims preparation costs as well. But unfortunately in Strata, all of those provisions in the policies that we deal with, the insurer has to approve that. So, and if they've already engaged an expert witness, their argument is, why should we pay for a second one, right? So, but at the end of the claim, if you engage an expert witness and get expert advice, that is included in the claim. And I forgot to include in this presentation today that also included is interest as well. So if your claim has taken 12 months to settle, interest costs are also included in that. But that's a really good question. Thank you very much, Tom. Now, I wanted to talk to you about what a submission should include. Okay, so there are three main things that we include in our submission, and I'm going to pull up in a second an actual submission of one of ours. But firstly, what we recommend is including a historical context. So a timeline of events. What happened? When did the claim occur? What happened? When did the insurer hand their decision down? What was their decision? What did you discuss with the insurer in the intervening time of the claim? Was there an expert witness? Did you have a dispute around the expert witness's advice? That's all historical context. You put it down as fact. And then in the next heading, we look at the issues in dispute. This is the key part of your submission. What are you disputing? Where are you, and why are you disputing? And going back to those 5 points of evidence that we referred to previously in the slide, are you disputing the policy conditions and interpretation of the condition? Are you disputing that the expert evidence wasn't right? Has the insurer done something contrary to the Insurance Contracts Act? The online AFCA claim, okay, good. I'm going to refer to this in a second. So you've just asked a question. I'm going to talk about in a second about the 2,000 word limit, all right, and 15 attachments. So yes, issues in dispute. And lastly, resolution of the claim. This is important. What do you want to resolve the claim? Do you want $5,400 for the non-financial loss? Do you want, the loss of rent accommodation? You actually need to put a dollar amount and quantify this. If you're referring to repairs, you need to put a builder's quote forward if one hasn't been put forward already. And finally, any attachments. While awaiting for dispute resolution, can you repair damaged areas? Can we discuss that at the end, Nikki, if that's okay? That would be really good. Thank you, Paul. All right, so I just want to show you a dispute submission an example of a dispute submission that we submit to insurers in the internal dispute resolution process and also the Australian Financial Complaints Authority process. So, okay, can I just get a thumbs up, Nikki? Can you see the Word document here without prejudice? Yep.
Yes.
Okay, good stuff. All right, so this is a sample of what we submit when we submit a dispute to an insurer. Now, if you're making an offer to settle a claim, I always start the letter by saying without prejudice, because what you don't want is you don't want your offer that you're making today to prejudice a future offer. All right. So I always start with without prejudice, include a date and who you're sending the letter to, and a summary of the claim. So water damage in the bathroom, the client name, the claim number, the date of loss, and a description of what the claim is. Historical context. So this is what I mentioned in the previous slide. So I just like to go through and give a timeline of events of what happened. Make sure that you stick to matters relevant to your dispute. So you don't need to go through and say everything that happened in the claim. And the good thing with your dispute is quite often we just refer to emails and go through the pertinent points in the history of the emails, and that will give you enough historical context. The next thing is your issues in dispute. What are you disputing? In this sample, we're saying that the assessor is misstating the facts. We're saying that an exclusion doesn't apply, and this is why an exclusion doesn't apply. This is a bathroom claim that is associated with waterproofing membranes, and we're saying the insurer needs to pay for the tiling costs as well. And lastly, what you want to do is list what is your resolution of this complaint and matter. That can include things like interest, which Australian Financial Complaints Authority will automatically include anyway, and also any non-financial losses that you want to claim, as well as the actual financial loss. Okay, so let's go back to this submission. All right. Now, lodging a dispute. So if you want to lodge a dispute with an insurer, the dispute details contained in their product disclosure statement. The easier way is just to ask the claims handler or whoever it is to refer the matter to their dispute resolution team. If you want to lodge a claim in Australian Financial Complaints Authority, you go to their website and it's fairly easy to follow. Now, Tom, good question earlier about the 2,000 word limit. So I don't ever use you follow the form of the Australian Financial Complaints Authority. They will ask you in 2,000 words, tell us what your dispute is, and in X amount of words, tell us what you want. I always say in that part, refer to attached letter. there isn't a limit of 15 attachments, but you can say that doesn't mean that you can't send more attachments afterwards. All right. So if you've got more attachments that you want to send, when Australian Financial Complaints Authority acknowledge your dispute, you can then send more attachments to them. Okay. And what you send to them is not your final submission, because there is an exchange of information between parties. And you'll get the opportunity to review the insurer's information that they provide, or their submission to the Financial Complaints Authority in response to yours, and you'll have the opportunity to respond back and forth. All right. So the first submission that you make through the website, you'll have many opportunity to make further submissions. Can I just say on that, try to make your submission short, sharp, and punchy and to the point. Stick to the relevant points. Try not to veer off course, but sometimes you might have 15 arguments as to why the insurer is wrong. All right. But try to keep it short, sharp, and punchy and to the point is what I would say. Now, I want to go to the next part, which is what I spoke about earlier. All right, let me just check this, Sebastian. Can insurer discharge full responsibility of future repairs if we're paid off, e.g., occurring gutters leaked after major repairs, fallen tree, been following up for more than 3 months, and finally to discharge liability by paying me off to find my own repair? That's a good question. So Sebastian, yes, if the insurer engages their repairer, they warrant the work. If they do not engage their repairer, it is between you and that repairer to deal with any workmanship issues. All right. Now, I will just say that leaking gutters may not be covered by a strata policy if the gutters weren't appropriate for holding the amount of water in your roof, or if they were blocked. Those type of things are not covered by strata insurance because it's not sudden and accidental damage. So it might be that you are responsible for fixing the gutters, but the insurer is responsible for fixing the consequential damage. So just keep in mind that they will warrant work that is insurable damage, but they may not warrant non-insured damage, which could be the gutters. The gutters will be covered if like a tree impacts them or if the property burns down. That's part of cover. But if it's a maintenance issue, it may not be warranted by the insurer's work. Oh, you said fallen tree. Okay, yes. So that is something that the insurer should warrant. And if you want the insurer's warranty, then I would recommend that you ask that they engage their own builder to conduct the repairs. Okay. Now, finally, I just wanted to share with you today, because I know that water damage claims are the biggest disputes with insurers. And I'm going to share with you some of my intellectual property on the arguments we submit to insurers. All right. I'm going to bring a lot of words up on the screen today. If you are watching this and you have a water damage dispute, you may come back to this presentation and come to the final part of this presentation and pause the screen. And if you have a dispute with an insurer and you're disputing something for your own personal reasons, then you have my authority to plagiarize what I'm putting up on the screen today. So to use it, this is our intellectual property. If you're a service provider like another broker or a strata manager or someone else, you don't have my authority to plagiarize these words, but you can still read it and come up with your own wording as well. So, all right. Sorry, let me just... What if you know the gutters are blocked, Scott? Okay, what if you know the gutters are blocked? Can the insurer decline the resultant damage? Yeah, the policy does have, Scott, in it exclusions around known defects and known issues. And if you don't, if you have a known issue in a claim and that is not addressed by you, insurers do have exclusions and conditions in their policy where they can deny a claim. So the answer is yes, that there may be reason for an insurer to apply an exclusion, the known defects exclusion to your claim. All right, so let's move on. So Sudden and accidental. All right. I always say this is probably one of the most subjective terms in insurance. What is sudden damage? A policy does not have a definition of sudden in it. All right. So you can copy and paste this. I'm not going to read this word for word, but I'm just going to speak to the slide and tell you my views on this. So sudden can mean damage that happens in 1 or 2 days. It can mean damage that happens in, could it be damage that happens in 2 months or 2 years? What is sudden? That's not really defined. So that's the first ambiguity that you would want to argue with the insurer. And then secondly, if there's a leak that's happened and the leak is a slow leak, did the damage happen suddenly, straight away, and progress get worse? And is that a reasonable argument? And the question is, it's a very subjective and ambiguous part of the insurer's policy. So this is what I write to use on the argument of sudden and accidental damage. And you can see in that slide, I've referenced 3 previous decisions by the Australian Financial Complaints Authority. Wear and tear, gradual deterioration. All right. This is also another interesting issue in water damage claims, because quite often you will have a leak that has occurred because of wear and tear. And I see there's a number of questions. We'll get to them in the end, if that's okay, Nikki, because we're coming close to the end. But in a water damage claim, you'll have a component associated with wear and tear and a component associated with water damage. So the first argument is that wear and tear, in my view, is where time and normal use is the only or major contributing factor that caused the damage. All right. And you then have to look at, well, where has the wear and tear and where has that damage occurred? Has it occurred in the membranal pipe? And what about the consequential water damage as well? So so this is where I say the wear and tear condition. There are ways that you can argue that as well. And this is how we argue it for our clients. The next thing is late notification of claims and conducting repairs without the insurer's authority. Now, insurers will have conditions in their policy which require you to notify them immediately and ask that you not conduct repairs without their authority. Now, that is in conflict to Section 54 of the Insurance Contracts Act, which has the effect, and I'm going to read this word for word, it has the effect that an insurer cannot deny indemnity based on a technical breach of the policy or other act or omission after the policy was entered into, unless the breach, act, or omission could reasonably be said to have caused or contributed to the loss subject of the claim. All right, so just keep in mind that if you've notified the insurer late of a claim, they have to show that your late notification has caused or contributed to that claim. If it was that the loss was always going to be the same, whether you notified the insurer today or when the claim occurred, it's very hard for them to determine that their rights have been prejudiced. And likewise, conducting repairs without the insurer's authority, the Section 54 applies in that instance as well, particularly where you've taken, where you've provided all of the evidence of the damage, you've got the reports which show the cause, and you've really summarized the claim completely for the insurer. And also there are conditions which require you to take reasonable steps to minimize loss and prevent further damage. So you do have the ability to conduct repairs without authority, although insurers like to see that they are notified early. And we do recommend our clients notify the insurer as early as they can as well, to avoid this dispute from having this dispute in the first place. Non-discovery. Now, you're going to have times where you have a pipe burst or a membrane fail, and you don't discover the damage for quite some time, okay? And there can be arguments with insurers around late discovery of claims and issues. Just remember that the policy doesn't require that you find the damage straight away. It requires that you have damage, but it may be that you have reasonably not found the damage until a certain period after. Okay, so, and this is what we write in the non-discovery argument. And lastly, this is probably one of the most contentious issues we have with insurers. If you have a claim for a failed waterproofing membrane and you're wanting cover for the tiles, and you want to take it to dispute resolution, you're up for a fight. We don't fight these claims all the time. And the reason being is that insurers' argument to us, and it's fair and reasonable, is that after a certain period of time, membranes are going to fail. And it really should be the responsibility of the owner to maintain their property. And if insurers covered failed waterproofing membranes for every property in Australia, the cost of your insurance would be significantly higher. So we pick and choose our fights with insurers around waterproofing membranes, but I'm just going to explain this to you. And we touched on this in our last presentation. So when you have a failed membrane in a shower, for example, or on a balcony, there are three parts of the damage. So the first one is the top layer, which is the tile. The second one is the membrane, which is the second layer. And below that can be damage, which is like a subfloor, okay? Now, typically, insurers are responsible for covering the water damage component, which is the damage underneath the tiles, but they don't cover fixing the membrane. Now, the insurer's argument is the removal of the tiles is required to fix the membrane. But in this case, the removal of the tiles can also be argued that you need to remove the tiles to fix the damage as well. And I've had a case which was handed down in the adjudicators by an adjudicator, which shows that the insurer is responsible for all costs associated with fixing insured damage. So this slide here is good for the removal of waterproofing membranes. But know that you're going to be up for a fight with an insurer. They are not going to pay this. They're going to fight this on principle. And our experience is that we have about a 50-50, maybe a little bit higher success rate on this issue. And it's one of those contentious issues that adjudicators give very differing decisions on as well. Okay, so that's all I have for today's presentation. How much time have we got left? So we've only got a very short amount of time now. So we'll go through the last of the questions, Nikki, and yes, we'll hand over to you.
Okay, thanks so much, Tyrone. That was fantastic. There's just so much detail there, and thank you so much for offering to provide that information, and people can access that information. We were asked during chat whether that presentation would be sent out. We've confirmed with Tyrone that we will be sending a link to the presentation out this afternoon when we distribute the recording. So Tyrone, we really thank you for that. Excellent. All right, we've got some questions that came through. I think you did mention a few of them while we were talking. So we had one from Lena that came up saying, will the amount of $7,000 to $10,000 also be applicable to the insured if the case was in favour of the insured?
No. So the insurer pays for the dispute resolution process whether they win or not. Okay, that's one of the arguments insurers have that says it's not fair. But yes, it's paid for by the insurer.
Okay. We also had a question from Tom saying, what is the position where an insurer declines to renew your cover where you have indicated you will be lodging a complaint with an insurer?
Yes. So the insurer still has the ability to decline your claim, to decline your policy. Unfortunately, you do have to go through that process. They will normally give you 14 days notice of their declinature, and you'll at least have the opportunity to get significantly through the internal dispute resolution process. What are some of what can you ask for as part of your what you're looking for? It might be that the insurer does insure you. If there was a difference between the cost of the previous policy and your new policy, that might be a sample of what you asked for, an example of what you asked for as well. Just know, like, I've never had this dispute with insurers, because what I always say is if an insurer is declining to offer cover, you may just need to find another market for your policy. But there are people in North Queensland and other parts of the country, or that have defects, that really find it hard to find insurance. And that might be a time where dispute resolution is appropriate.
Okay, thank you. And Tom's also just mentioned that the presentation was first class, and thank you, Tyrone, for the information, how helpful it is. He's just asking whether he can share the presentation. And we just like to say to everybody that we really do encourage you to share the presentation and the resources as much as you possibly can, because the whole point of the exercise is to get the information out there and to assist people. So yeah, Tom, we're very happy for you to share the links when we send them out to you later today, and thank you for the feedback. Okay, we had a question from Paul saying, while awaiting for dispute resolution, can you repair damaged areas?
Absolutely, yes, you should. And what I say is that repairing during dispute resolution is actually something that I would highly recommend if you have the means to do so. The reason why I go back to expert witnesses in the previous slide, what you will find is if you engage a builder to do the repairs, they might find something that the expert witnesses have said which isn't right or correct. So that's a really good opportunity for you to get that for free, get that advice for free, because if you're paying a builder to do a repair, they're probably more than happy to put a few sentences down to you in an email as to why they disagree with a certain report. And the other thing as well is it's going to help you in quantifying your loss. If you've got the final invoice, you can add that to the end of your, the last part of your dispute submission.
Okay, excellent. Thank you. And we had just a comment come through from Scott saying, I believe declining cover due to AFCA lodgement is not allowable under the ICA.
Yeah, it isn't. But look, so what Scott's referring to there is that if a claim has been unsuccessful, can an insurer then turn around and decline your policy? So the answer is that they shouldn't do it and they're not allowed to do it, but sometimes they can turn around and decline it because of claims history, right? A lot of the time I've seen a lot of cases where the times that we've been unsuccessful in the Financial Complaints Authority, the insurer does turn around and decline the policy. It's not allowable, but they may have another reason to decline your policy. But the real reason is that you cost them $7,000 to $12,000 in the Financial Complaints Authority. Yeah.
Okay. All right. Well, we might wrap it up there, Tyrone. We're just a minute before, and we've got just a few things to mention at the end of it. But once again, I'd just like to say thank you so much. I noticed that we do have some questions coming through. Amy's mentioned a question a couple of times, and some of the questions that were sent in were just not applicable for the presentation today. They might be more general insurance questions. And we did really want to, because there was so much information that Tyrone had to share with you, and it was fairly detailed. We try to keep it on topic as much as we possibly could today. But what we will do, I'll definitely collect all of those questions from the chat and other questions that were presented to us before the session today, and get them through to Tyrone. And Tyrone, if you're happy for me to do that, we can get back to people with the responses.
Excellent. Sounds great.
Okay, that's really, really good. So thank you very much, everybody, for participating. We're really great to hear that you enjoyed the presentation. We've had some really positive comments come through, and we really do appreciate that. Obviously, there's been a lot of time and effort that Tyrone's put into the presentation today, as always, with all of his presentations that he does. They're always just at such a high level, so we thank you very much. Okay, so coming up to the end, we just wanted to let you know quickly about some presentations that we've got. So we've only got 2 more webinar sessions for the rest of the year this year, so please keep an eye out for them. Next week we've got from the ACT, we're speaking with the team from Bridge Strata and Signature Strata about owners corporation governance. And then on the 17th of November for Queensland, we're talking to Will Markin from Tower Body Corporate, doing a deep dive into Queensland body corporate financials, which should be a really fantastic session as well. So either join us for one of those or both of those, and we hope to see you. We've got some really, really great sessions coming up in 2023, of course, and no doubt Tyrone will be joining us again for another session. So keep an eye out for that one, because I'm sure that you'll definitely want to be there for that one as well. So yes, Tyrone, did you have anything else to say to everybody before we actually wrap everything up today?
Not really. Look, I just want to say thank you, Nikki. It's been a pleasure working with you through the year, and it's always a pleasure presenting to your audience as well. So thank you very much.
Thanks for joining us for this educational session. If you gained value from the information, please like this video. You can also engage further with LookUpStrata by subscribing to our YouTube channel, or by being kept informed about Strata news via our regular newsletters. Our subscribe link is listed in the description box below.